This video is based on the technical analysis of HK50, which we also refer to as the Hong Kong index, and we're on the weekly chart at this point in time. And on this particular chart, we can see that the market at this point in time has given us what seems to be a huge overextended M structure over here, or a double top. And again, it is an overextended double top because the first leg is much higher than the second leg, and it also has a neckline more or less at that point. And as you guys know, whenever we have these patterns, we want to see price breaking sufficiently below the neckline, which is over here, and then heading back up to the neckline to test it. And at that point is where we want to see price move further down to complete that structure, right? So based on what I've said so far, the anticipation is for the market to actually move further down to around this level to close in line more or less with where it had started, right? So what else do we see in regards to the weekly chart? Another thing that we see in regards to the weekly chart is that as much as we had what is a double top over here, which has a neckline at that point, we also have another double top over here which similarly has a neckline at that point, and we can also see that the neckline has been broken to the bottom side. And again, what we want to see happen is price hit back up to the neckline to test it, and at the neckline is where we should look for further sell opportunities. And as I said, in my very humble opinion, our take profit should be around this level, which is in line with where this huge first M structure had started. I hope what I'm saying makes sense. And again, guys, I'm just going to utilize the Fibonacci retracement tool just to see if this neckline of this M structure or double top aligns with any key numbers that we have in regards to the Fibonacci retracement tool. So just bear with me while I do so. Let's have a look. Fibonacci, let's have a look. There we go, more or less. And we can see, guys, that the neckline, which is at this point over here of this double top or M structure, we could say aligns with both the 50% as well as the 61.8% Fibonacci retracement levels, right? So that adds as confluence in as far as selling opportunities go, because number one, remember guys, as I said, we have this double top. Number two, we have price breaking sufficiently below the neckline, and it again heading back to the neckline. Number three, we have the neckline also aligning with with both the 50% as well as the 61.8% Fibonacci retracement levels. So what this means is that we may potentially see the market from this level actually move that down to this level to close in line with where this huge first double top had started, right? So what I'm going to do now is head down to the daily chart and let's see what else is happening in regards to the daily chart. Let's just zoom out. And again, just to recap, guys, remember on the weekly chart we spoke about how we have this huge M structure which has a neckline at that point, and we also spoke about how the market had given us this smaller M structure which has a neckline at that point, and we saw price again breaking sufficiently below the neckline, hitting back up to the neckline. And I said at this point over here is where we may see the market move further down, and the neckline, which is now also a very strong level of resistance, aligns with both the 50% as well as the 61.8% Fibonacci retracement levels. So here we are on the daily chart. What do we see on the daily chart? On the daily chart, we can see that we are indeed in a downtrend, which adds as further confluence in as far as looking for potential sell opportunities go at this point in time. In fact, let me just actually add my daily channel, and I would add my daily channel more or less in this manner. Just bear with me. And just a reminder that we need to ensure that whatever drawings that we do indeed add to our charts are as close to perfection as possible, just to ensure that when we do ultimately execute, our execution is also very much accurate, right? So we could say more or less that this is our channel, and as I said, it adds as further confluence in that it confirms that indeed at this point in time we should be looking for potential sell opportunities. What else do we see? Remember guys, on the daily chart we have the neckline over here, price came back to that level. At this point is where we should have sold, actually, right now that we are on the daily chart. But what else do we see on the daily chart? Another thing that confirms that we should potentially be looking for sell opportunities is the fact that as much as we have, as I said, this huge, or rather the smaller double top with a neckline over here, we also have, if you were to pay attention to this area, what is a head and shoulders pattern over here. You guys can see that, with this side being the left shoulder, this being the head over here, and this area being the right hand shoulder, and it has a neckline at that point as well. So head and shoulders patterns are very much similar to M structures in that when we have M structures, as I said, we want to see price breaking to the bottom side of that neckline, head back to the neckline to give it a test, and at that neckline is where we want to see price move further down, right? So in head and shoulders patterns, we want to see the formation of the pattern, right, and then price breaking sufficiently below the neckline, and then come back to the neckline to test it, and at that point is where we want to see the market move further down. So remember, let me just actually zoom in here. We have, as I said, this pattern, which is a head and shoulders pattern, and it has a neckline at that point, and we can also see that price broke to the neckline, went up to the neckline to test it, and at this point is where I would look for potential sell opportunities, especially if the level aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? I'm just going to add a neckline for that head and shoulders pattern. Just bear with me. So more or less we could say that this is our neckline of that head and shoulders pattern, and then from here I'm just going to move down to the H4 chart, and let's see what's happening in regards to the H4 chart. And just to recap again, remember guys, just to zoom in a bit, on the daily chart we spoke about how the market has given us this just bear with me, if I can just draw it. The market has given us this pattern over here, which is a head and shoulders pattern, with this side being the left shoulder, this being the head, and this area over here being the right hand shoulder, and it has a neckline at that point, and we said we saw price breaking sufficiently below the neckline, heading back up to the neckline to test it, and at this point is where I said we should potentially be looking for sell opportunities. But now that we're on the H4 chart, what else do we see? So as much as we have that head and shoulders pattern, just also bear in mind that the market has given us another structure, which seems to be an overextended double bottom or W structure. And again, it is an overextended W structure or double bottom because we have this leg being higher than this leg, and similarly it has a neckline at that point. So what this means is that we find ourselves in a very interesting position because we have two opposing structures. Number one, we have this pattern over here, right, which has a neckline at that point, and number two, we have this W structure over here. I hope you guys can see that, which also has a neckline at that point. So what this means ultimately is that buying or selling within this region is a bit risky. Buying or selling within the region is a bit risky, as the market may actually from this level continue to push further up, and that is because, as I said, as much as we have that head and shoulders pattern, right, we also have this pattern over here, which is an overextended W structure, and it has a neckline at that point, and price at this point in time is at a very strong level of support and the neckline of that W structure, and at this point we may see the market actually move further up to complete this structure which started here more or less, and the market may head all the way to that point. So what am I saying? So what I'm saying at this point in time is that as much as I'm saying that at this point is a good idea to be looking for potential sell opportunities, just bear in mind that we also have this opposing structure, and we may see price actually from this level move further up, right? But in closing, and just to go back to the daily chart, right, my bias at this point in time is for price to move further down, because number one, as I said, we are in a downward trending market, as you can see, because we have this channel over here, right? Number two, remember we have that M structure over here which has a neckline at that point, and I said that the neckline aligns with with both the 50% as well as the 61.8% Fibonacci retracement levels, and that I said at this point is where we want to see the market move further down, right? So my bias is for the market to continue to move further down. However, having said that, remember on the H4 chart we spoke about how we have that overextended W structure, and price came back to the neckline to test it, and at this point is where we may see the market actually move further up, right? So don't be surprised if price from this level over here actually moves back up to this level, right? Because we have that W structure, and at this level again, which is a very strong level of resistance, as we had multiple areas of rejection, as you guys can see, is where we may potentially again see the market move further down.